All right. Should see everyone starting to jump in here. All right, we'll give everyone another minute or so before we get started for today's webinar on financial forecasting. And so let's see here. Yeah, well, let's give everyone just another minute. Okay, get those. Perfect. All right. So we're here at our start time for today. So we want to thank everyone for jumping on with us today. I'm sure you guys were expecting to see Bruce on this. He had a little bit of some family business to take care of. So I am jumping in for him today. Hopefully that doesn't discourage too many people. But we are excited to go through the financial forecasting today. And we have John Cooper on with us today over at HoganTaylor. John, if you want to give us a little intro or give us a little background on yourself, then we can jump to it.
Yeah, thanks, Denver. So I'm John Cooper, a partner in the Tulsa, Oklahoma HoganTaylor office. We consider ourselves a regional accounting firm. We have offices in Arkansas and Oklahoma, with two of our larger offices being in Little Rock and Tulsa. I lead the construction niche for the firm. We have about 380 total employees across 4 offices. Our construction practice is primarily focused in Little Rock, Tulsa, with a little bit of Oklahoma City, and some Fayetteville that's coming in a little bit. We work on large general contractors, some commercial home builders or home building large home builders, and then specialty subs and contractors. We are the Oklahoma designate for SICPAC, which is a construction-based CPA firm collection or consortium. And happy to be here today and hopefully help Denver out with a little bit of insight from the external audit side of financial forecasting.
Yeah, it's always good to have, some of our partners from the CPA world kind of jump in on these webinars, because you guys can offer tons of experience or just things that you guys have seen with some of your clients. So today, a little background about me for those who don't know, but I run the implementation team over here at ProNovos. Have been in this position almost a year to the day. Next week will be my 1-year anniversary here. So before that, I worked at Foundation Software as an implementation manager for about 9 years. So it's always good to kind of share some of the experiences I have with, the software, the accounting industry, and just kind of construction as a whole, I guess. So if we get into, we'll launch up this first little intro question for you guys. Don't mind to take a second to just fill some. We got a couple questions for you guys if you want to fill them out. And then let's get into what we're going to go through today. Really, the big thing is to showcase kind of the technology that ProNovos can help out with, as far as, the revenue projections, cost projections, and just showing you guys how utilizing a platform like ProNovos can help boost the efficiency of, your guys' company, kind of managing that cash flow aspect of things. Because as we know, and as John will attest to, cash flow is everything these days, and how much work we can take on at any given point. I think that's always one of the big concerns, or just things on everyone's mind, right? We want to make sure that, we're staying on target. We're hitting all of our revenue numbers for the year. We're staying under those costs as much as possible, but showcasing a couple of tools that can help out with that. And John can help give us some insight from his realm of the world, with some prior experiences with clients, and what are some of the pitfalls that some people run into that hopefully we can try and address today and solve some of those. So while we're happy to have you guys throw in any questions into the Q&A portion of this. I'll try and answer them throughout the webinar here, but some of them will probably just hold on to the end here. So, John, I guess the first question that I want to kind of ask is, when you're thinking about financial forecasting, what are some of the big reasons why clients of yours or just construction owners and GCs and subs, why should they care about financial forecasting when it comes to revenue or costs?
Yeah, thanks, Denver. I think financial forecasting is just essential for planning, budgeting, risk management, and decision making for all facets of a construction project. As those of us that kind of work in the industry know, you're only as good as your really bad project. And so if we can mitigate those bad projects or figure out what's happening through that life cycle of the project, if we're 3 months in and we've determined we've got an anomaly with supplies or resource management or just some curveball that's come in, the earlier we can identify that, the earlier we can mitigate it and allocate resources or do something on the back half of the project in order to get our profit back to where we need it to be. Cash flow management is key right now. A lot of our specialty subcontractors are in a pay when paid contract, and they've got to get the pay apps in, 20, 23rd day of the month. And if they don't get those pay apps in correctly or on time, they've got to wait 30 more days before the time starts, before they're going to collect on those receivables. And so if we can work with, what we try to do is work with our clients as we get into there at the end of the year or some of the planning on the audit, and just look at a cash flow basis, schedule of jobs. Are you able to is your customer able to cash flow the project instead of you cash flowing the project of, waiting on when your bills are able to be sent out? Are you going to have to identify other areas of the project to kind of save some time? So managing cash flows and risks are paramount to when we get involved, to make sure, like when we're doing our opinion on the financial statements, that it's copacetic.
Yeah, and I think as technology is getting better and better every year, I think we're starting to see an uptick in people starting to take advantage of getting more detailed forecasts. But what do you think some of the reasons why some people might not be hip to it just yet?
I think it's time and resources. It's a very labor intensive process. As you're forecasting for a myriad of jobs that are at different stages, I think a lot of times that the accounting group or whoever's doing that is not seeking great input from project managers, or project managers don't have access to the data that they need to tell the accounting group that's doing the forecasting. And then just lack of software or tools. If it was easy as a click of a button, once you get the budget put in, and then you can kind of track that budget of, I've estimated this amount of material purchases and I'm 50% of the way there. And you could look at, okay, over the next couple of months, I've got to pay for that remaining 50% of materials, and you can look at your cash flow on a monthly basis. Those are the clients that we see that really are on top of when any sort of change might happen of, lumber prices from 2021, steel prices, anything that impacts a project. As you're evaluating your cash flow over the remaining 4 months of the year, we get really excited when clients have technology that they've invested in that allows us to also look at projects from a different lens, where we can add value and identify any potential cost overruns or underbilling opportunities where they could manage their cash flow just a little bit better.
Yeah, and do you think what are some of the most common forecast methods that you've seen so far? I mean, is it just simply people are getting in there with forecasting costs? Do you see kind of all sorts of different ones currently, or because we're talking about forecasting costs and profits, revenue, cash flow. What do you think you see most often?
It kind of depends on the industry. Our larger GCs have access to ERP software and other tools like Power BI. They maybe have a larger department that's able to drill down on some of the estimates. When the estimator provides it, they're able to kind of look at it and run benchmarks to make sure things are lining up with how the management or the owners are going to see the projects running out. And then for a lot of our specialty subs, it's primarily Excel. It's maybe a couple Excel sheets, one that's more of a cash management tool of, here's our projected billings and here's our projected AP or cost. And then here's other Excel sheets where we're going to sit down with the project managers on a monthly basis and let them tell us where the project stands and do our best to bring in the accounting information into those conversations.
Yeah, and I think that's always the big thing is, we've got an Excel sheet for this, Excel sheet for that, and it's, this PM has it here, this, we want to try and eliminate that as much as possible. But I think when it comes to forecasting, revenue or cost, whatever it may be, I think the big thing that everyone's always trying to consider or would like to is, what's on the backlog? What do we have left to either earn for each of these jobs for the rest of the year? Do you think that when considering things like trying to recognize the backlog on each of these jobs, what do you think are some of the pitfalls when you're trying to, observe those amounts per job?
One of the things we look at are completed job profitability versus jobs in process profitability. That's one of the first things I look at as we're proposing or about to work with the new entity is, are they able to close out jobs when they estimated the job last year to be a 25% profit margin and they're closing out jobs at a 15% profit margin? What's happening in that estimation period? As someone reported on the backlog last year, what is happening for that project fade? Is it resource management? Was it a supply issue? Did prices go up? Is it just rose-colored glasses from the PM? So the backlog schedule is something that we spend a lot of time on, of just trying to identify when we're projecting out these 30, 25%, or if it's a large GC, 5-6% margins. Is there anything that's going to impact these estimates? Because they are just estimates. I mean, as I work with other industries in like large foundations, I mean, an investment's only worth when you close it out. Like that's what it's worth. Like the unrealized gain is just, it sounds great on paper, but until you close out the investment, that's what you get. Kind of same thing on a construction project. We're estimating this amount of profit, but until we collect on our retainage and collect on everything, there's a myriad of things that can impact those numbers. And the more access to data that we have, in particular of an opportunity to look at the estimated budget and what's remaining to be spent or to be earned, that's when us auditors get pretty excited when management or the accounting department can provide easier access into where they really stand on these projects.
Mm-hmm. Yeah, and I think one of the questions here was repeating one of those metrics. One of them was completed job profitability and didn't catch the other one. I don't know if maybe we'll circle back to that one. We'll try and get you an answer there.
I can just real quickly, it was basically looking at completed jobs profitability versus jobs in process profitability.
Yeah.
One of the things we look at is if your jobs in process is about 10% higher on your profitability versus when you actually are completing jobs. That's something that we're going to want to ask a little bit additional questions about because when you're completing jobs, that gives us a pretty good sense of where your overall profit margin is going to end up.
Yeah. And I think, when considering not only just jobs in progress or completed jobs, but also the jobs that we're still in the bidding process, right? And I think that's the other thing to consider as we're looking through some of the insight into where we're at as a company. It's just making sure that we're collecting, or we're setting ourselves up for future success. So as we're going to go through the product today, we'll kind of talk about what all ProNovos has to offer as far as, financial workflows, or for anyone who isn't familiar with the product kind of at a high level. We offer financial workflows from things like the WIP, automation, a collections module for the billings, AP payables for aging purposes and tracking estimated payment dates, cash flow analysis, things like that. We also offer an analytics platform where we're able to build out these dashboards and graphs and KPIs on top of all of that information to kind of theoretically, or slice the pie any which way you want to see it. So we grab the data from the ERP system, pull it into our data warehouse, and then we're able to report on that. So as we go through this little mini demonstration, I guess, if you will, around the financial, I guess, forecasting piece of it, but some of the, I guess, common pain points and best practices that we usually see when it comes to forecasting revenue specifically is we got to know what our target is, right? We got to know, are we going to meet it, right? I think every client, this kind of goes back to what we're talking about as far as, we have a set target number for the year. Maybe it's 10 million, maybe it's 50 million, maybe it's 200 million, right? We want to be able to put that number out into the world. We want to make sure that all the jobs in progress plus any prospective jobs are aiding our efforts to meeting that top line revenue number, right? So as we're looking through our revenue projections tool, we're going to be able to see, how are we distributing that revenue throughout the year? Are we just doing it, evenly distributed? Do we want to add some sort of, S curve to that? But then also, what does that look like for the rest of the year? If we're in July or August or September, what does the revenue look like, for October, November, December, right? So I'm gonna do a little bit back and forth. I apologize, but I think the main thing for when we're looking at revenue projections is being able to have that kind of one-stop shop for everything. And I think that's probably one of the things you see most, John, is that, we've got our accounting system for our billings. We may have an estimating software for this, and an Excel sheet for any of our forecasting. So I think the one thing that ProNovos does very well is kind of being that one-stop shop for all of our information, where it grabs all those data points and presents it in a meaningful way here. So when we're looking at our revenue projections tool, and we're talking through some of our pain points, and what are we looking to solve? Because at the end of the day, if we're identifying a problem, we have to find a way to fix it. So as we're looking through, we've got our target, right? We're saying our target for the year here is going to be 40 million. We see that we have a total projected revenue currently of $20 million, right? So what does that mean? This is a number obviously we would type in, but all these other numbers are telling us what we've recognized in revenue so far this year, right? Any prospective jobs, right, that we have, in the pipeline. And then this is our total backlog. This would be current jobs and the prospective jobs that we have a pretty high confidence for, right? There may be some jobs that, maybe we're going to recognize these jobs as potential to be awarded, or maybe there's some jobs that maybe aren't so high on the confidence scale that, we want to exclude from these numbers, right? So as we kind of see our chart here is to show us our actual revenue, and then the dotted lines kind of showing us where our trend is going to go based on, the information that's entered down below. So as we kind of scroll through here, we would be kind of shown what our total backlog is, what our prospective jobs are, and then I guess any other miscellaneous revenue streams. If we're seeing, a monthly amount for scrap, or I don't know, any other ways that we're bringing in money that isn't, a job related. So if we click into the backlog, we're going to see we're greeted with all of our jobs, right? And then we're going to be able to see what our start date and anticipated end date is going to be for each project, and then the total contract amount for that job, right? So there's a couple different ways that you're able to distribute, right? So the top line would be your projected revenue for each of these jobs for each month, right? And then the bottom line is going to be our actual recorded and recognized revenue for that job. So the nice thing about this is you'd be able to click on any of these numbers and it would give you kind of a fly out window of, hey, here's our projected final contract versus our final cost. You can kind of get a little snapshot of where we were, where we currently are, what the percentage or dollar amount increase or decrease is. But what we're getting at here is being able to showcase how far along the project we are. If we are, 69.8% based on our cost completion, right? So projected final cost versus our actual cost, we got to be roughly 70% through our revenue, right? So when we consider our projected final contract amount versus our completion, we're going to see that that is what our to-date revenue number is, right? And we can see from the prior month, we increased it by roughly $600,000. So the nice thing is you're seeing how this job is progressing month to month, right? And I think that becomes very informative when we start looking at not only how much revenue we recognize each month, but also what we plan to recognize for the remainder of the year, right? So John, I'll throw this one at you. When we're forecasting revenue, or maybe what you've seen typically, what are some of the, I guess, most common methods that you've seen for how they project that revenue out on a month-by-month basis?
Pretty similar to what you're looking at here. Most of my clients, it depends on the industry, of course, but if we're talking about a subcontractor, they're going to look at probably resource allocation, when materials are expected to be delivered. That's something that's new now that we used to not have to really focus on, is lead times for suppliers. And as you're looking at your year in advance, or 6 months in advance, some of them will do 6 months, some will do a year. They're going to look at when materials will be delivered, when can they be installed, and then using the cost method of percentage of completion, then they'll kind of layer in each month of how far they think each project will be able to be, where revenue will be able to be recognized. And as we all know, billings don't necessarily equal revenue recognition in POC. And so when they're actually looking at installation or something along those lines, it helps. They're not necessarily just taking, 1/12 of an annual project and saying, well, we think that's what's going to come in.
Right. Yeah. And you have a couple different methods too of just, having the system kind of auto-populate these revenue numbers. We could also obviously just manually type in, hey, I think we're going to do $500,000 in revenue this month. We could manually update these, but if we go into the job itself, right, we can see that, here's our projections based on cost, right? If we're going to go on a cost method, based on dollars or percentage of completion, we could update these projections, right? We're seeing the actual, right, costs being populated each month for the length of this job. But for the projection amounts, we can either manually update these, or we can use one of our two options up here at the top too. So linear would be probably the lesser, I would guess, used function here as far as just distributing an evenly divvied up amount each month. But we do have the ability to, update these projections, right, moving forward based on an S curve. So when you click on it, you'd be prompted with a couple different options on how severe you would like that S curve to, how high and low we want the S curve to behave. So if we want it to be pretty close to even, obviously a slow ramp up, ramp up and a ramp down period, we can use the low functionality, and that'll get it closer to even. As you see, we'll kind of slowly from 500,000 down. If we go to, one of the high, right, we'll see that we'll have 900,000 as opposed to down to 17,000. So you have some flexibility on maybe the length of the job. If it's a longer job, maybe that's more of a low ramp up and ramp down period, but maybe something a little bit quicker turnaround might get a medium or a high sort of curve steepness to it. So we can save that. What that allows you to do is not only project the costs out based on that sort of S-curve function. If we go back into our revenue projection tool, let's go ahead and refresh that. What that will allow us to do is that will update actually the revenue calculation, right, for each of those months. So this will give you kind of an automated approach to how much revenue we're looking to recognize over the next couple months. But once again, you can always go in here and manually update these to get a grand total for the year for each job. And then as you project these off into the future, we can flip between last year, this year, next year to see not only where we were last year and where we ended up, but also, now that it's into August, we're creeping up to Q4 already, right? But you'd be able to look at early next year what we're looking to take on as far as our active jobs that are going on, plus any prospective jobs. So with that in mind, we would look down here. And I think this is one of the nicer features of kind of this tool here, is being able to track not only your current active jobs and where the estimated revenue versus actual is, but hey, what jobs, do we see in the pipeline, and where do we think that revenue is going to be earned each month for jobs that may start at the end of September, right? John, what in your experiences, what would you say the percentage of, even people that are just doing revenue projections, what would you say is, how common do you think we're considering prospective jobs into those backlog calculations as well?
Most of my clients are putting in some sort of projects they're bidding on where they feel pretty good or a high likelihood of winning. They're kind of doing that at the start of the year, forecasting it out over the next 12 months. And then obviously what doesn't happen all the time is, they get the one they didn't think they were going to get, and then they don't get the one they were really hoping and thought they were going to get. And so
Right.
that might change some of the operating dynamics for the company throughout the year.
Yep.
Another thing about this forecasting that's very helpful is tax planning for the owners. Towards the end of the year, if you're able to kind of forecast it out come September or whatnot, maybe some decisions can be made from a tax planning perspective, and or accruing bonuses. If the year is coming in a whole lot better, or forecasting out to be a whole lot better than if you did a conservative or kind of back of the napkin forecast, and everything's kind of coming into place where some revenue was expedited based on materials getting delivered or things being installed. Having the ability to look at this in real time or quickly kind of maneuver some things and change the S-curve to a higher or medium probability, that lets you make some decisions for your personnel, which, as we all know, personnel right now are it's paramount to firms and companies operating successfully in the future.
Yeah, and I think that's well said, because while cash flow and obviously top line revenue numbers are definitely, keeping the company afloat, I think just being able to manage resources and plan for the future as far as how many more jobs can we take on to, with our current employment, and just make the most of that too. So with the revenue projections too, obviously there comes a a facet to this where we can actually get into, if we go back into our backlog here, click into our job. We were kind of talking a little bit about the timeline of the job based on costs here. You can also flip-flop between percentage of completion or cost. So if you wanted to, divvy your percentage of completion linearly or on an S curve, you could do that. Once again, you can type in your manual percentage of completion for each month. That way, when you relay this back to the revenue tool, it can actually take, okay, if we're going to be 3% done with costs here, then up to 5, and then eventually we can have that divvied up for the revenue in a similar fashion. So not only, do we have to do it based on cost, but we can do it based on a cumulative percentage of completion as well.
Hey, Denver, it looked like there was a question on, is the revenue projection tab an added feature or is that an upgrade?
It is right now a added feature that we have recently enabled. So if we can talk after this, or if we can get an email from you, and we can get this turned on for any new client or any existing client too. So yeah, it's a simple flip of the switch. Now we have notated this that while it is one of our newer features, we're always open to any sort of suggestions or enhancements that you guys might see to it as well. So by all means, we can get that enabled on there. That way, you guys can start playing around with it as well. But with the and we'll wrap it up here in just a second. The last little piece here, and then we'll open it up to a bigger Q&A session. But with that projection tool that we drill in from the revenue projections, we can get into our adjustment feature, which is our projected final cost functionality, which allows you to go line by line through your budgeted items from concrete, steel, the labor component, the material component. We're able to track it, quantities of maybe material ordered versus material placed on a job. We could do it based on hourly, right? Hey, this is our estimated hours. Here's where we think we're going to be at the end of the job. We can update these costs based on a dollar amount, cost to complete, percent. A lot of flexibility with being able to track what your total projected costs are going to be for any given job. And, kind of talking to John's point is making sure that, based on our materials we've received or based on our man hours on the job, where are we going to end up? And the long-term kind of goal with a tool like this is being able to get a report that can not only give you what those projections are going to be, but will eventually allow you to track why those reasons are happening. Why are we increasing our costs on a job? Why are we decreasing our costs on the job? You'll be able to capture all this data in there and be able to report it at a global level or at a job level, like we're seeing here. Like, hey, here's all the times we were missing material, or all the times we had negotiated buyouts with our suppliers. So that's kind of the long-term goal. Once you really get into the weeds with it, is not only projecting out the revenue, but getting it down to a cost level, percentage of completion, and even to the individual line items within your job budget, because this will connect directly with your ERP system. And bring in all the costs, all the commitments for those individual line items as well. And I'm going to flip back here real quick, and then we'll open it up to questions. We're at our half-hour mark roughly. So there was a question about what ERP systems that this can connect with. I'll give you a simple little chart here that this is basically the full scale of it, as far as QuickBooks Desktop, Sage 300, Foundation, Viewpoint. We actually are in the earlier stages of integrating with Computer Ease as well. So we do have a lot of different options as far as what we currently connect to and what kind of data we are pulling into ProNovos to be able to report on, whether it's financial data, accounts payable, receivables, job costs, change order budgets, billings. I don't need to read off everything in here, but you got a pretty full scale list of information that does integrate with ProNovos. So if I hope we're not rambling on too much here if you guys have other meetings to jump to, but we'll open it up for any other questions for myself or for John specifically as well. So I do want to go ahead and let me go back here, keep this open here. But yeah, if you guys do have questions, just type them in the chat, and we'll leave it open for the next 5 or so minutes. If no one has anything, then maybe we'll end it a little early. So
yeah, I'll just speak real quick, Denver, of working on this forecasting piece, and a few of our clients have engaged ProNovos, and they've started playing with the data, and it's been very beneficial. Sometimes they'll invite us in to sit down on the forecast, like what are you guys seeing in the industry, some of the benchmarks that we will see as members of SICPAC. We get information on the different levels throughout the country of the profitability of certain jobs. I know each job is unique, but when we're invited into those forecasting meetings, we're able to provide an objective opinion into our clients. That's not necessarily the PM kind of saying, well, I'll work my way out of this, trust me.
Yeah, and when you have kind of all the information in front of you and you can make those proactive decisions, I think that really helps out everyone as far as visibility as well, from the PM team to the office personnel. So I think having some sort of platform that allows that it's just super helpful. All right. So we got
our contact information is on the last slide. So if anybody has questions about HoganTaylor, just feel free to shoot me an email, or our website. There's a link under our construction tab, or whatever you call it on the website, where you can send a message, and my marketing team will get it to me, and I'll be happy to answer any questions you might have.
Yeah, so we'll do a shameless plug of our upcoming webinar next month with talking more specifically about cash flow with the GBQ partners, and how we're going to be setting up everyone for success as far as using ProNovos to help leverage that kind of information as well. So when we're looking at some of the questions in the chat, what KPIs do you see your clients leaning on most? I think a lot of it is really coming down to, I guess the big reason everyone jumps on ProNovos is definitely for the insight on the WIP as far as budget, right? Budget versus actual hours, right? Estimated hours versus actual, and just trying to keep visibility on the status of each project. And as we're progressing along, making sure that we're hitting those milestones throughout the length of the job, and staying up on billing, staying up on costs, staying up on cash in the door, cash out the door. I will actually show one dashboard here that I think is usually, this seemingly gets the most oohs and ahs, if you will, from definitely the project management team. But I think for a lot of people, just kind of looking through the system, this is one of our billing dashboards. But the insight that, as you guys are projecting out revenue, projecting out costs, the thing you're really trying to get to is making sure that we're cash flow positive or cash flow negative on a job. So when we're looking at, not only, all right, we've got our contract, billings, costs, cash received, days to pay, so on and so forth. But I think this seems to be, the chart that a lot of people kind of see as the most valuable as a timeline, right? Making sure that our build to date is above our cost date, but more importantly, that our cash received to date each month is above our cost to date. And that way we're making sure that, the customer or the owner is funding the job, and not so much you guys footing the bill for, all the costs that are being incurred for the job. So while every job might not look, as ideal as this, but, this is as close to ideal as you want to get, right? Build to date, then cash received, then costs on the job. So that way we're staying on top of it. Second question for cash flow, how is retainage factored in? It really, I guess, depends on what angle you're looking at when money in the door, money out the door. If you're looking at, week by week, where are we spending money? What are we expecting to bring in? Usually the retainage is excluded since it's not currently a payable or receivable. And I'm sure, John, if you have any thoughts on that, usually from what I've seen, that seems to be the case, is it's not an active invoice that, we kind of put those to the side and consider them later. But I'd be curious to see if you've seen it any different way.
No, I've seen it a ton of different ways actually, but most of the time, depending on the project, if it's 5 or 10% retainage, most people will exclude that from their cash flow financial forecasting. And then they'll project it out when they anticipate collection the best that they can.
Right. Yeah, because that's always tough because it's money to be paid or received later on, but not currently, an open payable or receivable. So, I mean, you can cut it any which way feels necessary, but usually that's what we've seen. Okay. Let me go back here and make sure we've got this up on the screen for everybody. In case you guys do have questions, if anyone here is, interested in, even just a simple demonstration of the product in a more personal level, we'd be more than happy to help you out. And if anyone in the location is looking for a CPA firm or, any services that John can assist with, we've got all his information up here too. And if we've got nothing else, John, it's been a pleasure having you on here, and I'm sure we'll do many more webinars together. But for now, I think any closing comments that you have for anyone left here?
No, I appreciate the opportunity, and hopefully didn't put my foot in my mouth too much as a big Oklahoma guy. So no, happy to answer any questions anybody might have, and just appreciate the opportunity.
Yeah, once again, thanks, John, and thank you guys for joining. If you want to register for our next webinar, you should be able to see that on our website, and yeah, it'll be our next one for next month. So until then, we'll see you guys in the next one. Take care, guys.
Have a great day.